So, just as the game plan stated, we ended up having a strong bullish closing trend day. With that being said, I ended up making one trade on the day, a 100% success rate, 50% return buying SPX call options towards the exact lows. G-Roar ended up making a 700% plus profit return during the power hour trading session within just 2 minutes trading SPX. Together, we had multiple wins that yielded nearly a 1,000% profit return. The first trade on the day was a very nice win on SPY call options. I'm going to be breaking down the trades towards the end. First things first, I'm going to be preparing you to trade the best setups at the best prices. So, in terms of the overall SPY and where we're at with this overall, pattern, we have the red, green, red. We have the red, green, red. In this particular situation, when this is occurring with the red, green, red, red, green, red, then we have another green candle, then we have another green candle, and the green daily candlesticks, on the daily chart right here looks very, very similar, There's likely going to be an opportunity for puts. Now, in terms of the best entry, is likely going to be towards major resistance at all-time highs, and there should be a dip buying opportunity as well. So I'm going to show you how to trade the trend both ways. Let's get straight into the analysis. In terms of last time where this pattern ended up occurring in this particular situation, what happened was, previous day highs was a key level, but we already had a slight break above that as we're having a small, gap up here during pre-market. Previous day lows was another key level. So this is going to be the main top watches. But I'm telling you, in terms of the first opportunity, let's take a look and dissect this in terms of the 10-day 30-minute chart, because as of now this isn't going to be the most predictable game plan or pattern. We're still going to crush it regardless, but in terms of what I'm seeing, the most likely outcome is looking like a drop and then an overall slight recovery, not like a very, very strong bullish recovery, but a slight recovery at the bare minimum towards our key levels of interest to be dip buying call options. So let's get straight into the analysis. In terms of the overall SPY, let's get into the 10-day 30-minute chart right here. So basically, the way this is setting up, we got like this triangular downtrend that's forming. It's gonna try to drop first. So we already got a lot of resistance at 662.65, new all-time highs. In terms of the overall game plan, in terms of how we can be setting up, potentially with this overall pattern, it could end up in terms of like how this is looking right here. It could end up something like this, where you see how you have like this triangular shape and then it pulls back, then it starts to bounce, recovering some of those lost gains right there. And in terms of other situations on how this, 10-day 30-minute chart looks in a way, there's just so many clear signals that's stating we're like, how this shape looks, it's gonna try to drop first. So this could be actually a play on futures where you get in towards the pre-market as well, but look to get in towards early into the day as well. But you could just see right here in terms of like these overall patterns and just trend recognition. I would say this one looks the most similar. Yeah, so looking at all this, these are the most similar ones. So basically in terms of like how this is setting up, quick morning drop and then bullish recovery at our dip levels. In terms of what it looks like the most, this is what it looks like the most. It looks like this the most, and it looks like this the most. It looks even, closer to this one. So basically a quick drop and then it starts to have a bullish recovery. A quick drop, then it starts to have a bullish recovery, right? So that's going to be the most likely outcome. So since the triangle is already forming here, in this particular situation, the first play would likely be on put options. But you got to be careful, man, because this can have a strong bullish recovery. Like I said, this isn't going to be the most easiest and predictable and lucrative game plan to be trading. But let's get into it in terms of the drops and in terms of, where it's previously bottomed with this pattern. Because like I said, in terms of how this looks like, this literally looks like an exact repeat. It looks very, very similar to September 12th. Also looks similar, to September 10th. So when you're trading today, just look at those patterns, look at those chart recognitions. Now, in terms of key levels for calls, let's go over to calls first. So previous closing price, 660.91, Right now we're at 661.66. So this is going to be the first key level of interest to keep your eye on, below 661. So in terms of the range, below 661, these are going to be the key levels of interest to be watching for a dip buying opportunity on calls. Now, in terms of calls, make sure you're using bullish 30-minute candlestick confirmations, but this is going to be the key buy zone right here. This is going to be the first buy zone. It's going to be the higher buy zone. It's considered a great buy zone. And basically, this buy is going to try to maintain on a bullish uptrend as long as it holds above this zone. So this is going to be our first price zone to be buying call options. You got a break and retest level right here. You got another break and retest level right here. So in between this zone, if you're seeing a bullish 30-minute candlestick confirmation, green, red, green, bullish confirmations, green, double, red, green, bullish engulfing, you're seeing the bullish patterns to be buying calls at these break and retest levels that have not been tested during normal trading hours, also haven't been tested during extended hours trading session, as we just got a clear breakout and now it's slowly coming back down here. So that's going to be a very, very strong dip buying zone to be buying call options, where I drew out these two rectangles right here, right? This is going to be your buy zones for overall call options. Now, in terms of your lower level for call options, absolutely phenomenal. I would just look to automatically get in at these levels. But again, if we're maintaining at this zone, the SPY is considered bullish and it's going to try to recover. And in terms of where it's going to try to recover to, it's going to try to recover to right here. So just keep that in mind. As long as we are holding and maintaining above this. But again, when you're doing this, look to get in. So 661 to 660 in between the zone, dip by the calls only if the confirmation's there. And understand, as long as the market is holding above this, it's on track for the bullish recovery to 662.20, right? So SPY's sitting here, not cracking, not breaking down and retesting, not reacting bearish, and it's just sitting here, breaking out, retesting, forming higher support, right? You can see right here, resistance, breaks out, higher support, resistance, breaks out, higher support, right? If it's maintaining that and doing that, it's going to go to 662.20, and you're going to want to be in calls in between this range. Now, that's what you need to understand. That's the key floor. If it hits that floor, we're going to be interested in calls. If it maintains at that floor, reacts bullish, no reason for puts, stay out of puts. So this is going to be an automated buy zone. And again, that zone that I just disclosed to you is a very, very strong buy zone as well. So look for calls with confirmations. This is going to be another one. We got a break and retest right here, 658.60. We got a break and retest right here, 658. And we got a key oversold support level with a break and retest right here at 657. As you can see, we had some slight resistance right around here. And then once the SPY broke above that resistance level, it ended up having a very strong breakout, dropped back down during the extended hours, bottoming and having a retest, right? So in terms of pattern recognition, like I said, in terms of where we're at with the overall SPY on the 10-day, 30-minute chart, it looks like it's trying to, form this triangle. As it's closing out the triangle, it tries to drop a little bit. It might go a little bit under 661. Then it starts to bottom out and rally back up. Then it starts to bottom out and rally back up. Then it starts to bottom out and rally back up. Now, would I say it's going to be like a crazy bullish rally today? Likely not. It would be a little unusual, in terms of how we're setting up on the daily chart. I mean, if you look, it's just kind of like we have this floating like puff of a candlestick of this daily chart. So I wouldn't say it's going to be like this super strong, crazy bullish trend day. Obviously, if we hit previous closing price and maintain above that 660, it is going to be overall bullish. We could have a pullback towards mid 662. But it seems like the safest game plan could be call options because we are supposed to have some sort of bullish recovery. You just got to keep in mind that a key level of interest for puts for a quick scalp can be towards 662.60 to 661.70, right? So in terms of the morning session, this is your quick scalp zone for puts. I would say be a bit careful because, again, it's going to try to attempt to have that bullish recovery. So just make sure you're getting the best entry and make sure there's confirmation that's there. Especially if we get back down to here, it's going to try to start bouncing right around this overall zone. So it's like you really got to be careful with puts, man. The more easier play could just be wait for it to sell off. But again, you can technically look for a quick morning scalp on puts. I would just say be careful. I like the idea on calls more than the idea for puts because in terms of the puts, there's limited downside potential and it can have a bullish recovery. And it already dropped from 662.65 to 661.50, and we're already headed back towards that buy zone. So unless we're towards like major resistance, and again, use best confirmations, just be a bit careful on the puts. But if you're looking for that morning quick scalp on puts, if we're sitting around here and it's just maintaining bearish right around this zone, you could try a quick scalp on puts. Just be careful. And I wouldn't even look to risk a lot on puts. I wouldn't risk like above 600 and 63.50. Yeah, I wouldn't really risk above 663.50. In terms of puts, this might be a situation where if you try it, you might just want to cut your loss a bit sooner rather than just leaving it to ride. Normally we leave it to ride, but just be a little bit cautious on the puts, man, because the market is due for a bounce at oversold levels, and we're already headed close to that. But again, if you want to try it, what I would say is, if you do the puts, size in a little bit smaller, and if it's an L, size in normal on the call size, right? You make it all back and more, and then add to the winners. Regardless, even with a 50% win rate, you should be able to be extremely successful. If you tried puts first, didn't work out, then you did calls, you should be able to be extremely profitable. Add to the winners, and if you want and you do puts, just cut the L short, man. So that's the overall game plans. Like I said, the daily chart, is being a little bit conflicting. It is stating that above previous day highs, especially towards pre-market extended hours, could be a level to scalp puts. But the main focus as well, especially with confirmations and easier play, could be to just wait for a dip buying opportunity. So, I think you'd be better off just waiting for calls towards previous closing price and below that with the overall oversold zones I gave you. Wait for the market to flip bullish. Wait for trend reversal confirmations. That might be the best route. But again, if you don't mind, having a 50% win rate, you want to try both sides. You can try a quick scalp on puts. I wouldn't risk a lot though, like nothing above 663.50. Look to cut the loss quicker if it doesn't work out, and just be a little bit careful, man, because I'm telling you, it's like the strongest signal we're getting in terms of confirmations with this 10-day, 30-minute chart. Like, look at this. Red pin up, red pin up, red pin up, strong bullish trend, strong bullish trend, strong bullish trend, triangle, it bottoms at the triangle towards break and retest levels, break and retest zone. Triangle, it bottoms at the low of the triangle, break and retest zone. Triangle, bottoms at the low of triangle, break and retest zone. And if you look, SPY's forming that fucking triangle again, and we got some break and retest levels right here in this key support at 661 to previous closing price. And again, based off the daily chart, 661 is going to be a strong level of interest to scalp calls for a gap close reversal. The gap close reversal trading strategy has been working nonstop throughout the past 3 months in the market. It's been working nearly every single time on the long side, and SPY is currently gapping up, and we have a gap to fill below at 660.91. So, man, if you're really going to try puts, you get in, you get out, just do it quick, man. Calls, you look to hold it a bit longer, aim a bit bigger, man, and calls looks to be the easier play. But like I said, the market will attempt, it's really going to try to drop back towards the previous closing price, So if you want to look for a quick scalp on puts, and look, it's already breaking down, retesting, trying to form lower highs right here. I mean, right now it's at a red green. If we get a red 30-minute candlestick close with lower highs for 90 minutes, previous support, breakdown, retest, then go for it. Go for the quick morning scalp on puts. So that's the overall game plan. For those of you who are serious about trading alongside us, it's the first thing down below in the description. Market is setting up. I mean, based off of everything I just disclosed and identified, I mean, look right here. This is another one. We have this triangular pattern, and it bottoms at the low of the triangle. So in terms of where the low of this triangle is supposed to be at, based off these 10-day, 30-minute charts, even look right here. We have this again, this triangular shape, bottoms towards the lows. So in terms of the lows of this triangle, it's aiming towards previous closing price. It's aiming towards this higher zone, not the lower zone, right? And just be aware, if the SPY does go below this level right here and react bearish, right? We crack below this, react bearish, break down and retest, right here, break down, retest, forms lower highs for 60 minutes to 90 minutes, red, green, red, red, double green, red, right? Maintains below that, then is bearish, no reason for calls, and it's going to be dropping to the lower zone, and then you buy the calls right here in between this lower overall zone, right? Buying puts right here is a stretch. If you're going to buy puts, look to get in here, unless you wanted to get in towards the middle of the channel. Got to be careful because, again, we have strong support right here. But also, it's just much better to just wait for the next opportunity on calls right here. The easiest way to make money within the market has been buying oversold dips using the break and retest strategy, using the gap close reversal trade strategy, and confirming it with the 30-minute chart. Green, red, green, break and retest, right here. This is resistance. You see the resistance, 90 minutes. This is the breakout. This is the retest of that previous resistance. This is the higher floor, green, red, green wick, all bullish, uptrend, strong close, highly predictable, right? Breakout, retest, higher resistance right here, continues to pump, breakout, retest, right? Green, red, green, bullish. It's like, man, resistance right here, green, red, green, bullish, green, double red, green, bullish, breakout, retest. Like, guys, wake the fuck up. You should be printing money like us nonstop at the speed of light, using the curriculum, using the levels, using the green, red, green on calls, using the green, double red, green on calls. I'm telling you, the easiest way to make money in this market, man, just keeps on pushing for new all-time highs. Oversold dip buying opportunities. Key overextended hours levels that have not been tested during normal trading hours. Key dip buying opportunities. Right around here, key dip buying opportunities, gap close reversals. Right around here, key dip buying opportunities for gap close reversals. So if you do try the puts and you go red, you're an absolute degenerate if you finish the day red, especially if we had nice spikes at the call zones. There's absolutely no reason on why anyone watching this video couldn't be green with a win rate as low as 50%. Losing is a personal choice. Add to winners, double to triple the gains, set profit stops to ensure you don't go green to red, right? Win big, lose small, hold the trades. Like, guys, come on, man. We want you guys to go green every single day. Every single day at the speed of fucking light. If not, you got to finish green every single week, man. Make this shit count. So that's the overall game plan. It's the first link down below in the description if you want to trade alongside us. I can assure you we're going to absolutely crush it, head into today once again. In terms of some rare possibilities and another consideration why you want to try puts, in a way, it does make sense to take the idea on puts because it's likely going to work. And if it doesn't work, then we'll just make it all back more on calls. It's like, dude, position yourself to go green. Because suppose the overall trend ended up being bearish and you didn't take the idea on puts. That's what I'm saying. This is how someone could be red. This is how you have to think as a trader. If the overall day ended up being extremely bearish and you didn't take puts, you missed out on the win and then you did calls and now you're red on the day. But suppose that, you ended up buying puts and you banked and you're green enough to walk away. So if you choose to keep on trading and say you choose to keep on trading, you don't walk away, you risk 25, 50% of your gains, you buy the calls, doesn't work out, you're still green on the day. That's why, in a sense, as long as we're towards that upper key level of 662 to 661.70, it actually does make sense to take puts, knowing in this particular situation that the most likely outcome, in terms of these situations is we do get the bounces at calls, but if it does have a bearish trend day, we're going to want to be in on those puts, man. So it's like you can literally just start your day off as we're closer to the put zone. If we maintain towards us closer to 662 rather than the previous closing price at 661, that's what I'm saying. It's like we're kind of in the middle right now. If we're towards that upper middle, it kind of makes sense to scalp the puts because if you do the puts and the overall trend is bearish, you're going to bank. And if it's not bearish, you switch to fucking calls at the key levels and you make it all back and more. But if you don't do those puts, you might just, but if you don't do the puts, and then if the market, ends up being just bullish at the overall levels, what I'm saying is if the market ends up being bearish at the overall levels and you don't do the puts, a lot of people will get sidetracked and they'll just keep buying calls and losing money if the overall trend's bearish. So from a logical standpoint, I would say the best thing to do would actually be this. This would be the absolute best thing to do. Look for a quick scalp on puts towards 662 at market open, go green, call it for the day. If you choose to keep on trading, the most you risk is 25 to 50% of your gains. So if you want to risk 25% of your gains with confirmation buying calls right here, then do that. And then if you want to risk another 25% of your gains buying calls right here, then do that, right? But it's like, if you just try to buy calls here and skip the puts, if it doesn't work out, you're going to be red, and then you're going to be hoping that it bounces at this particular zone to go green, whereas you could have just bought the puts first. I mean, logically, it kind of makes sense to put yourself in a situation where you can bank both ways. You know, you have two sides on your particular favor on a day like today. So I would say the best thing would be a put first, and then then do the calls at this zone and this zone. Now, if you're looking for the absolute like free money play where it's just like get the fuck in, I would say right here. Literally just do nothing and wait to buy calls right here. Now, based off of how the day is setting up, we're going to do a lot more than that. But if you don't know what the fuck you're doing and you're somehow still in the market, I would just buy fucking calls literally right between this zone with just bullish confirmations, like a green, red, or nice, red and green wicks, trend reversal candlesticks. The most likely outcome, even if the SPY had a bearish trend day, it should bounce right here. But if it had a bearish trend day, it's really going to start to drop to this lower zone. But without a doubt, I mean, on a bearish trend day, it would be pretty shocking if we didn't bounce, towards this zone to this zone, right around this bracket. So that's the recommendation. And I actually recommend the trade idea. I think it's better to do the puts rather than to not do the puts, man. Because think about it. Like, if you do the puts and it works out, you're green enough to walk away, right? If you do the puts and it doesn't work out, you'll make it all back because you know exactly where the market's going to try to flip. So it's just fucking genius, man. But if you don't do the puts, you're just solely relying on the market to bounce on the calls. It's like putting yourself just on one side. And one of the dangers of putting yourself on just one side in a situation like this is if the overall trend's bearish, you're going to buy calls likely twice and end the day red, whereas you could have just started the day off with a put and walked away. So that's what I would recommend. Just be a little bit careful, man, and just understand in terms of the put idea. It's logical to take, but it could be an L, but it is logical to take. So it's an L that makes sense to take, and then just make it all back on the call side, man. So just think about it strategically with your position sizing. Don't go too heavier on the put side, just green enough where you can walk away if you're going to do it, and then save some for the calls if you want to make more gains. And if the puts doesn't work out, you're going to keep your loss small on that put. Don't risk above like 663 in that situation, 663, 663.50. And then just look to scalp calls at previous closing price, especially if it went that high to 663.50. Look, man, we're going to be green as fuck. Join the group, man. And another YOLO idea I have for puts is 663.50. If we go that high, just if we're pushing above new all-time highs, above 663, wait for a red, green, red. Wait for a red bearish 30-minute candles confirmation. Look for a quick scalp on puts. That's the final game plan, man. So like I said, man, the daily chart is a bit condescending, but the 10-day 30-minute chart is fairly predictable. So like I said, that's why I was kind of towards the end encouraging the idea for puts more, because it just makes sense to put yourself on two sides. Like if you put yourself on two sides in a situation like this, if you can't figure out how to be green with a 50% win rate, you have no business trading, man. There's absolutely no business trading. We're buying the cheapest, lowest risk trades where you can size in effectively, right? Like I said, literally just size in less on the put and just a little bit more on the calls. You're going to make it all back and more. Add to the fucking winners if the put didn't work out. You're able to be green enough to work away if the put does work out. It's like, dude, just fucking print. Print money at the speed of light. Non-fucking stop. Losing's a personal choice. So, like I said, the daily chart pattern is a bit condescending, but the 10-day 30-minute chart pattern is fairly predictable, and without a doubt, we should bounce at either the previous closing price or the, lower zone. So it's going to be a phenomenal day both ways. It looks like it's going to be phenomenal both ways. Like even if you tried the puts, it should work, and if calls don't work here, calls should work here. So in that particular situation, that's like a 67% win rate at the bare fucking minimum, where if calls don't work here, but puts worked here and then calls work here, that would be fucking amazing. But regardless, man, it's going to try to bounce here too. So another thing I'd recommend as well, just aim for smaller wins, man. Market's been very choppy. The moves haven't been as big. So in this particular situation, aim for smaller wins. And if you want to win big, another thing I would encourage you is you can win very, very big on small moves. Just wait towards power hour. So some adjustments you guys need to make within your trading with the overall price action not being as volatile and big, as we're at all-time highs, just kind of chopping it up. Look to trade towards the power hour. The power hour is going to be the key time where you can make massive gains on small moves with cheap, far out of the money option contracts that are getting ready to expire worthless, but the ones we buy when we're right, vast majority of the time, expire deep in the money for the biggest percentage gains. So that's the overall game plan. It's the first thing down below in the description if you want to trade alongside us. These are the trades that we ended up, making yesterday. As you can see right here, the market open trade a win once again. It's like, dude, what other group, what other trader do you know is winning this much, this consistent, this big every single day at the market open session where you can literally just walk away and call it for the day? Then if you choose to keep on trading, not that you have to, everyone has different goals and different lifestyles. And at the end of the day, if you choose to keep on trading, you're also choosing to risk money. And if you risk money, you can give back some gains and lose money, right? So there's nothing wrong with walking away. So anyways, but it is encouraged to come back at least during the power hour trading session. If you're not going to trade it, just observe it, or you can even just size small. Again, when you take the morning trades and you're green enough to walk away, we actually encourage people to scale down on their position size. Don't go as big as your morning win on your size. So if you bought 2 contracts, scale it down to 1 contract on the power hour trades. And it makes even more sense because the power hour trades are YOLOs that go up a fuck ton more. So, it could be considered a bit higher risk percentage wise, but it's going to go up a fuck ton more and you're going to be sizing in less. Plus, you don't want to get back the bulk of your gains. So, especially for small accounts, if you're doing 2 contracts at open and it hits, I would scale down to 1 contract at power hour or just trade the power hour and skip the morning. But I'm telling you, you really don't want to skip the morning because they just hit. They hit like almost all the fucking time, man. But you never want to skip power hour because it's the biggest upside potential with the cheapest, lowest risk. But if you're green enough to walk away, it is recommended and encouraged to size down during power hour if you took the morning trades or middle of the day trades. So 661 SPY calls for 44 cents a contract. Add, double the position size at 45 cents. These are the option quote prices moving in real time. As you can see, the trade dropped to 30 cents. We don't set stop losses. The most we put into the trades is our max risk per trade. As you can see, we added to the winners to double the gains. So the average cost on that was 45 and it went to 65. So if you do the math, 45 to 65, nearly 50% profit return. And it's a much bigger than a 50% gain because we added to the winners, which doubles the gains. So you're green enough to walk away. Losing is a personal choice, and as you can see, we actually tripled the position size right here at 49 cents, which brings your average up to 46, 47 cents, right? And the calls went up 22 cents. You get profit stopped out. You set your profit stops when you're up 10%, leave some runners to run, right? So you're green enough to walk away. So in that particular situation, since it was such a massive win on nearly a 50% gain with a tripled position size, if we had some losses after that, it doesn't matter because you're green enough to walk away, and you got to take those morning trades, right? Trade the overall system. So when you're green enough to walk away, it does not matter if you have 2 losses in a row after that. As you can see, there was 2 losses a row after that. In terms of our overall system, since we were green enough to walk away, since we made a nice 50% return, since we tripled our position size, that means that if you keep on trading, the logical thing to do is to risk 25 to 50% of your gains. And if you give that back to stop trading, right? And you don't have to keep on trading, right? And as you're risking those 25 to 50% of your gains, remember, you don't have to size in as big as you did on this trade. And we're also not adding to losers. As you can see, we're not adding to losers. We're not adding to losers, right? So think about this. This right here was a 50% return, but we tripled the position size, which tripled the gains. This right here is 2 losses. That's a 33% win rate, and this is a 100% loss. This is a 100% loss. So a 33% win rate, 200% loss in total, yet we're still profitable and green on the day with a 50% return, tripling the position size. Again, it's because of our system. In this particular situation, the win was so massive because we tripled our position size, so it doesn't even matter if we had 100% loss, 2 100% losses in a row because we were already green enough to walk away. And everybody knows the most you risk is 25 to 50% of your gains if you choose to keep on trading. So as you're risking that, if you choose to keep on trading, you need to understand there could be like 3 to 5 more trades on the day, right? So if your account's that small, then you size down. Like I said, if you did 2 contracts right here on the next one, then you just do 1 contract in that particular situation, or you don't take it. If SPX costs too much, you don't take it here. You wait until the power hour trading session. We always recommend our members the best times to be trading, specifically for small accounts. If you have a large account, you could just trade all day. Completely fine. It's worth it. But if you're looking for the best times to trade with the cheapest, lowest risk and biggest percentage gains, and especially for small accounts, it's during, market open and power hour trading session. So again, that's how you can be profitable and successful, having your first trade on the day, green, triple the position size, following the risk management system, and having 2 losses, 2 100% losses, 1 50% win, but we triple the position size on the win, which outweighs the losses. Plus, having the first trade green helps in that particular situation. But look, even if we started off with 2 100% losses on the day and then we had this win, since we tripled the position size, we still would have been green. That's what fucking counts. That's what fucking matters, that we could be green with 50% wins by tripling the position size. And we do it in a safe way by setting profit stops and moving the profit stops up higher to ensure that we don't get back the bulk of our gains. It's like, dude, if you set a profit stop, it's impossible to go green to red, right? So, it shows you how competent our system is, even with a win rate as low as 33%, because we're not adding to losers, we're adding to winners, and we're doubling and tripling the gains on the winners. And we tend to win a lot big percentage-wise on the overall winners. So, as you can see in terms of the fourth trade of the day, 6605 SPX puts for 100 cents. This is why we keep on trading, because it's unlimited winning and unlimited printing, right? So in terms of this trade, it went from 100 cents all the way to 150 cents. That's another 50% profit return you could have made there. And then in terms of the final trade, this is why you want to trade during the power hour trading session and use the right brokers, interactive brokers, think or swim, have your setup set up with hotkeys or a stream deck, be ready to print within minutes, because look, 3:57 p.m., 6615 SPX calls for 70 cents. You get notifications, you have your setup planted in rootness. There's absolutely no reason on why you couldn't have gotten in on that trade below 130 cents. Look, 2 minutes later, it's at 130 cents. And then look, it goes to 700. Do you see this? This trade went from 140 cents to 700 a contract in fucking minutes. And we were at 70 cents a contract. Again, this is why the losses don't matter. It doesn't matter if you have 200% losses. We were already green enough to walk away. And if we weren't green enough to walk away and we started off with 200% losses, look, this is a 700% gain. The wins always outweigh the losses because they tend to be always bigger percentage-wise. But not only that, it's because we add to the winners. We double and triple the gains, and we have the highest win rate in the game. So that's 3 for 5. 3 for 5. We bought these SPX calls at the lows at 70 cents. And look, fucking 690 cents. Sell. Do you see this? 600. This is the quotes moving in real time. 70 cents, 2 minutes left, 3:58 p.m., 2 minutes left to trade SPX, 70 cents, in the money, in the money, in the money, 130, 150, 500, 600, fucking sell at market order. Use the right broker to sell at market order. You would have been filled at 500 cents plus. You would have been in at 70 cents and you would have been out at 500 cents. You would have made nearly a 1,000% profit return in 2 minutes trading with us. Losing's a personal fucking choice, man. You can't name a single other fucking group out there on the fucking planet that is getting you in right here at the lows at 70 cents, right here. And then 2 minutes later, it spikes to 690. That's our fucking team printing at the speed of fucking light. You see this big ass fucking spike and this big fucking volume? That's Team Roar that's pushing new all-time highs as a group every single day, non-stop members joining every single day, printing at the speed of light. So I would suggest that you get in here. Click the first link down below in the description. Join the group. You're going to absolutely love it, man. Crushed it 3 for 5. In terms of my own personal trades, I ended up trading and making, I ended up alerting one trade yesterday. This was the trade that I ended up making in terms of my personal trade. At 2:48 p.m., right before power hour was getting ready to start, I ended up buying SPX 6605 calls at 380 cents. As you could see, as soon as I got in, current low. As soon as I got in, it started fucking spiking. Great call. The play fucking printed. Sold it at 620. Made 50%. That was my first trade on the day. I waited until nearly 3 p.m. to make my first personal trade on the day where I lured it. And it was a 50% profit return at the speed of fucking light, man. I'm telling you, in the analysis was fucking golden. All you gotta do is buy the dips. We fucking banked buying the fucking dips non-fucking stop. Losing is a personal choice. We absolutely crushed it, man. You guys need to get in here and you need to print money at the speed of fucking light, non-fucking stop. It is unlimited fucking winning and unlimited fucking printing at the speed of fucking light. With that being said, losing's a personal choice. I already can tell and I already know we're going to absolutely crush it on the day. I strongly recommend you join the group. It's the first link down below in the description. You gain access to our secured private organization that is pushing for new all-time highs every single day. You gain access to a real-time zero-date options train alert system. And as of now, you currently gain access to my trades within the overall chat and secured private organization as well, right? So it's the first thing down below in the description. Within the chat, we share our analysis, we share our trades, we answer any questions you guys have as well. And I'm telling you, it's the most secured private organization of zero-date options where you're going to absolutely fucking crush it, man. It's unlimited fucking winning and unlimited fucking printing non-stop. You are going to see, man, we are the absolute best zero-date option traders, man. It's unlimited fucking winning, unlimited fucking printing, cheap, low-risk trades, far out of the money, zero-date options. The most you risk is literally, in terms of the most you risk is your max risk per trade. So when you take a trade with us, Risk Management 101, and again, this is all explained within the overall program at Risk Management 101, you're going to learn so much about trading just by trading alongside us, man. You're going to fucking see as well why you're going to want to be taking the YOLO trades. In terms of the YOLO trades from 3:30 to 4 p.m., they have the biggest upside potential. Make sure you're using the right broker who gets you out at the fucking peak. Look at this spike, man. This fucking crazy ass fucking spike. Those were those SPX contracts, literally last minute, right? Make sure you're using the right broker that gets you out at the exact fucking peak of that, man. Losing is a personal fucking choice. Do not use Robinhood. Use Thinkorswim, Schwab, or looking to interactive brokers as well. Those are some of the best brokers. Those are the best brokers where you could be trading 0-to-8 options on, man. You're going to see why we like to trade during the YOLO time, 3:30 to 4 p.m., because you can outperform everyone within the market. You can take the cheapest, lowest risk trades with the biggest percentage gains, where it's like, dude, it doesn't fucking matter if we have a red session during power hour, because typically we're already green enough to walk away anyways. And also, you always want to trade power hour because it offers the biggest percentage gains, man. It's the cheapest, lowest risk trades. Do you understand how many times we've had 1,000% wins where we buy and sell for a 1,000% win throughout the past week? There's been 3 days where we had 1,000% gains. That's 3,000% returns. How the fuck can anyone be red if they make a 3,000% return? You can have 30 losses in a row, 100% loss in each fucking trade, and still be fucking profitable. And we add to the winners, so losing's a personal choice, and you can even have more than 30 losses in a row. It's like, guys, wake the fuck up. Join the fucking group. You could be extremely successful here with a win rate as low as fucking 30 to 50 fucking percent. We have the highest win rate in the game because we're the absolute best. My win rate was 100%. G-Roar traded more, 3 for 5 on the overall day. Point is, we fucking crushed it, man. It's unlimited fucking winning. It's unlimited fucking printing, man. I mean, I don't know about you guys, but I would definitely take 3 for 5, fucking 60% win rate to make 1,000% returns. That's something that I would do, because I know I could be profitable in that situation with a win rate as low as fucking 25%. So losing is a personal choice. Wake the fuck up, print at the speed of light, add to winners, double to triple the gains, set profit stops, move the profit stops up higher to ensure that you don't get back the bulk of your gains, and make sure that the most you're putting into the trades is the max risk per trade, and 7 out of 10 times the L's come back to life and they go green. So join the group, man. Join the group. You're going to print at the speed of light. You're going to fucking love it, man. You're going to see, wow, this group is growing every single day, pushing for new all-time highs, phenomenal fucking community, secured private organization, printing money at the speed of light, surrounded by multimillionaires, and you're surrounded by the absolute best trades. The absolute best trades, and not just the best trades buying sellers, but the best system. The best fucking system within the fucking market, man. It's unlimited fucking winning, unlimited fucking printing. I can assure you, you will not find a better trade alert system out there. This is the absolute best trade alert system. Join any other group, join any group, any fucking group, whether they charge $1,000 a month, whether they charge $50 a month, any group. Join a group who you think can get better results than us, and then compare our shit to theirs. And you're going to say, dude, there's nothing to compare here. There is no comparison. These guys are in a different realm. These guys are in a different fucking dimension. These guys are trading at a level so fucking high, or I can't find anyone else who's doing what it is that the fuck they're doing. Do you understand? We don't just do buy and sell alerts. We create money-making systems. This is the money-making system. This is the entry. This is the strike. This is the symbol. This is us adding. These are the quotes moving in real time. We do all the fucking work for you to print. We can't come to your house personally, fly out, and click the buy and sell button for you. You do have to make sure you're using the right broker to trade 0-to-8 options, that allows you to just get it filled instantly with market orders. It's like, dude, market orders make sense when you buy a trade at 50 and it goes to 1,000 in a fucking minute and you need to get out. Market orders make sense in that particular situation. Our trades have unlimited upside. They're not limited. So do not use limit orders. There's nothing limited about what we do. There's no stop loss. So the trade that's down 90% comes back to life 7 out of 10 times it goes green. And when it goes green, we add to winners. And when it is down 90%, we're actually happy at times because it's a great opportunity to buy another strike. And sometimes that strike is a hedge. Sometimes that strike is trading with the same side of the original call, just a different strike price, right? So it's like, dude, losing is always a personal choice. Even if we have losing plays, even if we're down 90% on play, it's always a personal choice. Because like I explained to you, we have a system that works. It's unlimited fucking printing. And it's unlimited fucking winning. It's the best way to be trading within the stock market, especially day trading 0-to-8 options. You're not going to find a better system. No stop losses, max risk per trade, add to winners, double to triple the position size, set profit stops, move the profit stops up higher. We've tested everything. There is no better way to be trading 0-to-8 options. This is how we trade, and we have the highest fucking win rate to do it. It's called printing at the speed of light. This candlestick right here is fucking minutes. Fucking minutes in a candle. 100 to fucking 700. We do this every single fucking day, man. Who the fuck do you know is doing that on slow fucking shitty choppy days where a lot of people are getting fucked? And I told you it was going to be a bullish trend day. So you should have bought fucking calls at some point. It's like if you looked at the fucking chart, you could have just analyzed it and said, okay, it's going to be a strong bullish closing trend day. This right here is resistance, resistance, resistance. Tops of these candles, closing price of these candles, resistance for 90 minutes. This is the strong breakout. This is the retest. What the fuck did William say? He said to buy fucking calls on a break and retest, right? The level was 658 to 658.50. So there was a higher level that formed after the video posted at 659.60, and we had a strong breakout to 661. Everybody knew the profit target on the day, if you watched the fucking video, was above 661. So it's like, dude, get the fuck in on the retest when there's a green, red, green, and there's another green bullish 30-minute candlestick confirmation to call it, and bank on the fucking calls. You seeing this? Break, retest, green, red, green, another green bullish candlestick, strong bullish close. It's like, dude, losing is a personal choice. You seeing this? 6615 calls for 70 cents to 700 cents. What did the game plan say? Strong, bullish, trending close. And everybody knows on a strong, bullish, trending close day, we have profit targets, which was 661, literally close at the profit target, 661 to 662 range. Everybody knows we use break and retest strategies, right? This is resistance, resistance, resistance. This is the break. This is the retest, right? For a move back to our profit target for the strong, bullish close. This is a green, red, green, another green, higher support. This 30-minute candlestick is now closing above this 30-minute candlestick. Get the fuck in on the fucking calls. Like I did my fucking work. I bought the fucking SPX calls at 6605, 380 cents at the lows, sold at 620. And then G-Roar shows up last fucking 3 minutes and fucking calls SPX calls 6615, 70 cents, and they go deep in the fucking money to 700. Dude, losing's a personal choice. Our game plan's print. They should be able to get you in here for fucking free, and you should be able to stay here for fucking free and also as a fucking tax write-off to write that shit off because it's unlimited fucking win, unlimited fucking printing, man. I can assure you. It's the best time, and it's the best fucking month to join the group. Our trading's at all-time highs. We're getting our members the absolute best results. I've checked the analytics last night. Checked it once again. Nobody's fucking leaving. Everybody who's joining this fucking group stays. They don't fucking cancel the subscription. 9 out of 10 people stay for the long term because it's unlimited winning and it's unlimited printing, and everybody knows there's no better system out there. There is no better trade alert system out there. There's no other options. I'm trying to explain to you, like every single day we show this. Nobody does this. Nobody has a real-time track record documented. Nobody has a real-time zero-day options trading alert system documented. It's not out there. It doesn't cease to fucking exist. This is years and years documented. We have the same hundreds and hundreds of members who've been with us for years because we're consistently making people $500 to $1,000 a day. There's multimillionaires inside of Team Roar who are literally making $100,000 a week. They reset their account at $50,000. They double it every single fucking week. Non-fucking stop. Making fucking 200K to 400K a fucking month, man. They put in 50K. They flip it to 100, 150K every single fucking month. Say they had some rare bad week. Okay, they lose 1 week of fucking gains. Like, dude, losing's a personal fucking choice. We haven't had a red week in over a fucking year. It's just unlimited fucking win, unlimited fucking printing. Every single week is fucking green. I'm trying to explain to you, like, we genuinely cracked the code. We fucking broke out of the fucking matrix, dude. We cracked the fucking code, and it's nonstop winning, and you ain't gonna find anything else out there like this. So I'd strongly recommend that you join the group, or you're gonna get left behind. You're gonna miss out on the best trades every single day, man. Trading is about fucking trading. Who's got the best trades? And then when you got the best trades, when you know when to buy and sell, well, who's got the best system? Who trades the best asset class that are the cheapest, lowest risk with the highest win rates? Not that we need them, but we're the best, so we fucking have them. But everybody knows every trader optimizes for a system with a strong foundation where you can be successful with a low win rate, and that's what Far Out of the Money Zero-Day Options is. It allows you to be successful with a low win rate, but we figured out how to have the highest win rate in the game trading zero-day options in a way where we can be extremely successful if the win rate was low. This is how you're able to get shit rich quick, by buying cheap, low-risk contracts, adding to winners, setting profit stops, moving the profit stops up higher. You get trades that go straight up, from 70 to a fucking 100 at the speed of fucking light. They go from 70 to 100 and you get profit stopped out. This is why we say to set profit stops. It goes from 70 to 700 at the speed of light and it can drop right back down. That's why you need to set your profit stops and you need to sell fucking quickly. If you're not going to sell quickly, set the profit stops, move the profit stops up higher to ensure that you don't get back the bulk of your gains and once it has that pullback, right? Losing is a personal choice. If your trades are going up 860% in a single fucking minute, we are outperforming every single group and every single fucking trader that you know of every single fucking day. So that's our normal. Go back if you like, watch every single fucking video. You're going to see every single day we do the same thing. This is why nobody fucking leaves, because everybody knows they can't find this anywhere else. they cannot find another secure private organization that has the biggest percentage gains, cheapest, lowest risk plays, highest win rate doing this, surrounded by multimillionaires, surrounded by an organization where the members have been with us for years, and you get real-time access to the real-time trades, to the real-time system. It's all documented. When the market's open, you can take the trades. When the market's closed, you can, dissect the trades as well by going to on demand on Thinkorswim and just looking at everything that happened and what we did. It's all documented in real fucking time, man. So losing's a personal choice, man. If you want to get connected with shit rich and wealthy people, I strongly recommend that you trade alongside us and click the first link down below in the description. You're going to absolutely love the group and you're going to love the community. Like I said, man, everybody fucking loves it. There's no bitching. There's no whining. There's no fucking complaining. Nobody's fucking leaving. Everybody's choosing to stay, because when you can do this to people's accounts, they see no reason to leave. They're sitting there saying like, dude, I'm taking cheap, low risk trades. My account's up 100% of the day, $5,000. How much have I given them to stay here? Absolutely fucking nothing compared to how much money I'm fucking making. I'm saying here, dude, if anything, we should be the ones raising the fucking price, making thousands and thousands of dollars every single fucking week. We ain't charging any fucking thing. I already told them it's free to fucking stay. The group is so fucking amazing. You come in here, you bank, it's free to fucking stay. You want to get rich? Take a lot of trades, win on the vast majority of the trades, add to winners, double to triple the sizes, set profit stops, move the profit stops up higher, and make the biggest percentage gains. That's how you get rich in the safest, cheapest, lowest risk way possible. Look at this, man. 400% returns. You fucking seeing this? 6615 SPX calls. That's the trade. We made this in 3 minutes. 70 cents to 350. Who the fuck do you know is flipping 70 to 350 in minutes, a 400% return? This is why we say to fucking, trade during the power hour trading session. Fuck, if you would have made that trade on a different broker, that would have been a 600% return. Even on Robinhood, it's fucking crazy. In 3 fucking minutes, 70 cents to 350 cents. On a broker as incompetent as Robinhood to be trading 0-day options on. Fucking insane, man. 400% return, right? If you trade SPY options after fucking 330 on Robinhood, they're going to absolutely fuck you. And regardless, they're going to fuck you anyways, man. They're not going to fill your market orders instantly. Get the fuck off of Robinhood, man. Especially when you're making some money. But regardless, you shouldn't be there in the first place. Like, fuck Robinhood. They're not built for 0-day options traders. You got to trade brokers who are built for the asset class that you're overall trading. So it's the first link down below in the description, man. It's unlimited winning. It's unlimited fucking printing. You're going to print nonstop. It's the first link down below within the description.